Hello and welcome to this video in which I'm delighted to introduce the volume point of control indicator for TradingView. As some of you know, I'm sure it's been available on the other platforms, on NinjaTrader, on TradeStation, on MT45. But prior to this, we did not have the functionality that we needed within the Pine script. But I'm delighted to say we now have that. And this is a first view of the VPOC indicator for TradingView, hot off the press. It won't be available for a few weeks just yet, but rest assured it is in the pipeline and will be available very soon. Now, if you're not familiar with the principles of the volume point of control, or indeed market profile from which it's derived, if you like, I'm sure many of you will be familiar with our methodology. That's Anna and myself. We've been trading using volume price analysis for 20 odd years. Now, that relationship is a linear one, if you like. It's the relationship between the volume here at the bottom of the chart and the associated price action on the chart itself, and from that an interpretation of where the price is likely to move next. So it's a relationship between volume and price, which is why we call it volume price analysis. What this histogram does on the right hand side here is to introduce the concept of time. So basically we are moving volume from the x-axis at the bottom of the chart and we're swinging it around and bringing it up onto the y-axis down here. And what we're looking at in that context is volume, price and time and their relationship. So to put it simply, when markets spend a long time at a particular price level, you are going to get higher concentrations of volume, and where the price spends shorter periods of time, you're going to get lower volume. And that volume is constituted with all the various orders that are either sitting there, traders looking to get out of markets where they've been trapped into weak positions, you're looking at various limit orders, etc. It is the consolidation of volume that congregates around that particular region that then is defined on the histogram. And there are two primary components to the indicator. I'm going to do more videos on this as well and show you it in action and show you how to use it and what it will do for you as a trader. But these are just the basic essentials. And there are two primary components. First of all, we have the histogram down here, which really defines where we've got high volume and low volume. And as you can see, we have the highest volume here, and that is in fact designated the volume point of control. Where this dash line is, these little yellow dots here, that is actually what we call the volume point of control itself. And the reason I've chosen this particular chart is because the price action is oscillating around that particular point right now. It's what we call the fulcrum of the market. It is where price, if you like, is in agreement. In other words, there is no strong bias to either the bear side or the bull side. So the price simply oscillates at a particular level, and it will not break away from that level until volume increases on one side or the other and a trend begins to develop. In other words, we see a bullish move away or we see a bearish move away. But whilst the price action is there, then it is simply consolidating around that region. And it's what we call the fulcrum of the market. And the simplest analogy that I've come up with over the years is to imagine a seesaw, a very simple seesaw. It has a fulcrum in the middle and you have two equally weighted people on either side. That is what is happening right now for this particular pair on this particular time frame. In other words, the two are equally weighted and there's no bearish or bullish sentiment to drive it one way or the other. So that's really the first component, and that is the volume point of control itself. And then coming away from that, you then have the profile of volume itself, which falls away to the top here. You can see all the peaks and troughs here as it gradually falls away down to the bottom here. And these lines on here are marking really the high volume and low volume regions, what we call low volume nodes or high volume nodes. So where you have much higher volume here, for example, in this region, you've got higher volume coming in here, you've got lower volume down here, and you've got low volume right at the bottom here. So, and you've got low volume falling away right at the top here. So you get a complete picture. Now this is, bear in mind, this is obviously just one time frame. And as we always urge you to do as traders, is to use multiple time frames, and the same will apply here. It's exactly the same principles. You have to use this indicator in multiple time frames. So the other aspect to the whole business of using the volume point of control and the indicator and what it will tell you and what it reveals is, first of all, it reveals this histogram, and you think, okay, fine, well, that's awfully interesting. Well, how do we use it as a trader? And that's really where we come into using the indicator across multiple time frames, because where price action is approaching, let's say it's approaching a low volume region here, for example, you would expect the price to move through there relatively quickly. And you might say, why is that? And the answer is very simple, because volume can be considered in exactly the same way as you do in terms of price-based support and resistance. So where price is approaching a region of low volume, you would expect the price to move through there fairly rapidly, because there's very little in the way of volume to act as either resistance or support. Equally, where the price action was coming up here, for example, we were moving into this pretty strong area of congestion here and up towards the volume point of control, you would not expect the market to move through there fairly rapidly. And indeed, as you approach the volume point of control, it is telling you loud and clear, expect congestion, because you've got a ton of volume there, and there is also the volume point of control sitting there also at the highest peak of the histogram. Now, there is a second, more subtle analysis of that particular statement, if you will, which is this. Where you have low volume, the market in the past has not considered that important, and therefore, why would it consider it important now? Equally, if there is high volume on the chart, you could argue that the market has considered that an important region in the past, and therefore is likely to consider it an important region now. Now, that is more of a semantic point, if you will, but that in essence is the principle of what the volume point of control is all about. It is giving you this visual, graphical representation very clearly of where the peaks and troughs are of the volume, which will then help you in terms of analysis from a support and resistance perspective in exactly the same way as you would use price-based support and resistance. And we talk a lot about it in the webinars. So those are the core principles of what the volume point of control is all about. I wanted to show you this one because it just shows you the extent of time that a price on any market, any chart, this could be a stock, could be an index future, commodity future, bond, doesn't matter what it is. This happens to be a spot FX chart, but it could currency future, could be anything. And it's the amount of time that markets will spend in congestion, particularly when they're at these key levels. And as you can see here, we are at the volume point of control. Now, the key point is this, and I'll cover this in the next video, which is why it's so important to consider this in multiple time frames. If you're trading one time frame and your market pauses, the price action pauses, it may well be that the price has actually hit a volume point of control or a serious area of congestion in another time frame. And that's the key of using time frames with any indicator, but even more so using the volume point of control indicator. So, again, like we do in the volume price methodology, where we're looking at volume and price to give us clues as to where the market is heading next, the volume point of control is used in exactly the same way, because we're looking at it across the time frames. We want to see what we've got above and below. Are we coming into a low volume area? Are we coming into a high volume area? If we're trading as an intraday trader, are we coming up to a low volume area and expect the price to move through there very rapidly, which is great, fantastic. We don't need to know so much volume to drive it through. Or are we coming up to a high volume area? We expect the market to congest because there's a ton of volume sitting on the chart there, etc., etc. That's what this indicator is all about. Hope you've enjoyed this particular video, introduction to the VPOC for TradingView. Lots more to come, so thanks for watching. See you again soon, and bye for now.